And this is the Spanish Taxes Overview webinar, free webinar from Spainguru. My name is Bruno Bianchi. And the objective of Spainguru has been facilitating relocation process for English-speaking foreigners to Spain since 2014. As you can see there, we have some reviews, 98% of them 5-star reviews. So you are in good hands. And you can use Spainguru.es the way you want, both for do-it-yourself, if you're in a visa process, or you're just finding information, or you want professional help and professional services. I have personally vetted every single partner on Spainguru.es. Many of them, I have used them myself. For lawyers, for example, Stuart was mentioning, Stern Abogados did my nationality process. I'm originally from Argentina, and I got my Spanish nationality 4 years ago. And you can find immigration expert tax advisors for your US and Spanish filings, financial planning as well, and visa compliant health insurances, medical certificates, sworn translations, apostille services in the US and the UK with expedite services, bank accounts, money transfer services, property rentals, mortgages, anything you can imagine, okay? When you're moving to Spain, not only you will need your immigration services, but also peripheral or complementary services. I did my best to add as many as possible and personally vet them, and maybe you get discounts as well. I have negotiated discounts for many of those services. So yeah, but not only you can use Spainguru.es for that, you can also use the free resources that we have. Like, for example, this webinar. This webinar is absolutely free. You can join your weekly newsletter that I send every Monday. I just sent one 45 minutes ago, where I list the top 10 discussions in my groups and the top or most viewed video on the YouTube channel. Probably the YouTube channel that creates most videos about Spanish immigration out there, one every day, blog with more than 1,600 articles, 10 new articles every week, and Facebook groups with a total aggregated member count, 140,000 members, okay? You have dedicated groups for Spanish non-lucrative visa, for digital nomad visa, immigration, expats, Americans, UK, Filipinos in Spain, you name it. So many groups. And a disclaimer here, because I am not a legal advisor or tax advisor. This presentation is for general information purposes only and does not constitute legal, financial, or tax advice. Consult with a qualified tax advisor or legal professionals for personalized guidance. And of course, you can find recommended tax advisors on Spainguru.es. Spainguru is not responsible for any errors or outcomes from using this information. But then you say, what am I going to get out of this webinar? So I hope that we accomplish or hit all these goals. The first one, gain an overview of Spanish taxes, so you understand the key tax categories in Spain and learn the basic principles of taxation in Spain that I'm sure are different, very, very different from your original countries. Prepare and informed conversations with tax advisors, so you engage more effectively with them, and you ask more precise and informed questions, especially understanding your specific situation. Third, clarify the role of a professional tax advice, and this webinar will make you understand that this is general information and it will never replace personalized, tailored tax advice, and recognize how individual circumstances can significantly impact your tax liabilities, and identify key considerations for expats, especially US and UK nationals, tax implications of moving to Spain, and be aware of the compliance requirements that you have and calendar deadlines to avoid potential penalties. All those things I want you to go out of this webinar and that you have ticked them positively. Yes. Now, let's go with probably the most important concept, Spanish tax residency. How do you establish tax residency in Spain? The most important one, 99% of people fall into this condition, spending more than 183 days in the country, in Spain, within a calendar year. That is from January 1st to December 31st. If you physically spend more than 183 days in the country, regardless of your immigration status, as a tourist, under a Spanish non-lucrative visa, as a worker, you name it. If you're physically in Spain, 1 second, your foot is in Spanish territory, that day counts for Spanish tax residency. And then there are two other conditions. If you spend less than 183 days, but your main economic center, you get money from Spain, and that's your main income, then you could be considered tax resident as well. Or if your family lives here as well, that could also happen. Therefore, considering that if you spend less than 183 days in Spain, you are not a tax resident in Spain. If you arrive after July 2nd, there's only 182 days left in the calendar year. Therefore, you would be in the safe side. You would not become tax resident that calendar year unless you spent days before that during that same calendar year. This is also something that happens. Therefore, always verify your travel records, count prior days spent in Spain, and refer to double taxation treaties for guidance on tier breaker rules in case of conflicts. Because sometimes the year in which you move to Spain, sometimes you could be considered tax resident in Spain and in the country where you were before. Therefore, you always have to also check the double taxation agreement that exists between the two countries. If you're from the US or the UK, you have double taxation agreements. What are the consequences of being a tax resident in Spain? You will be subject to taxation. First, worldwide income and potentially net value of your assets on December 31st. And if you're not a non-tax resident, you will only be taxed for your income and assets sourced from or located in Spain. For example, you spend less than 183 days per calendar year in Spain, but you own a property here and you rent it out. Then there are different tax rates depending on your passport. If you are an EU or associated country national, like Switzerland or Norway, then you are taxed, long story short, 19%. Okay, for example, your rental income for the property you own in Spain. But if you are a non-EU or associated country national, the rate goes to 24%. Okay, for example, okay, as you can see there are variations depending on the type of income. These are the tax rates for non-residents. Now, if you are a resident in Spain, you will normally have two types of regimes. Okay, the first one is the general tax regime, in which you will have to pay taxes on your personal income. This is called IRPF, or Impuesto sobre la Renta de Personas Físicas. Potentially, you could be eligible to pay wealth tax, Impuesto sobre el Patrimonio, which is a progressive tax on the net value of your assets. Potentially, you will have to pay solidarity tax instead of wealth tax, which works the same way as wealth tax, but it's a national tax on the net value of your assets. You will have to disclose your overseas assets value at December 31st, informing the tax authorities in Spain using the form 720. Okay, this is the general tax regime obligations, and then you have a special tax regime. Not everyone is eligible for this, which is also called the Beckham law. Okay, and the eligibility is for specific situations, such as relocation to Spain for work purposes, as an employee, most of the time, 99.9% of the time. Self-employed individuals usually cannot qualify for this special tax regime. The advantages of this special tax regime: there is a flat 24% tax rate that applies to employment income worldwide. Non-Spanish income is exempt for taxation, and there is no requirement to submit the 720 form or pay wealth tax. There are some cons for this special tax regime. The tax savings for earnings lower than around 55K per year are minimal, really. So really, you should consider joining the special tax regime if you're eligible, only if you make more money than that per year. Additional administrative burden may outweigh the benefits, and there are no deductions or allowances. For example, if you move to Spain with a family. So as you can see, you have to study your specific situation to understand if joining this special tax regime makes sense to you. Let's talk about the first tax obligations. Overseas assets reporting, as we said, is the 720 form, where you have to declare your assets and rights held abroad. You have your assets and rights separated into different categories. For example, bank accounts, investment, real estate, crypto. This is model 721. Now, there is a threshold in which you start declaring the value of those assets and rights, which is 50,000 euros per category. That means, for example, if you have two bank accounts with 25,000 euros each, the total value of the asset category bank accounts is 50,000 euros. Therefore, you should declare those two bank accounts with their deposits. First year requirements: full disclosure of overseas assets for wealth tax, especially for wealth tax, Impuesto de Patrimonio, solidarity tax, we're going to talk about those taxes, and personal income tax. Okay, so this is why tax authorities want to know what assets you have outside of Spain, because they may infer, or they may take the conclusion that you are liable for Impuesto de Patrimonio, wealth tax, solidarity tax, or maybe getting income from those taxes. Now, After you make your first reporting of the 720, you have to only report this if there are changes of more than 20,000 euros for each of those categories, or you close asset categories. Deadlines for submitting this is March 31st. So in just a few days, you have to submit this 720. And usually, if you work with a gestor or with a tax advisor, you will begin the preparation of this 720 form on January 1st. And you will have to not only fill this form, but also you will have to, let's say, show the ownership of these different assets and rights by showing bank statements and uploading details of, for example, properties that you own, etc., etc. So this is the first tax obligation. You don't pay the tax, but you have the obligation to inform the authorities. Second tax obligation, income tax filing or personal income tax, IRPF. What is the taxable income? You have, first of all, ordinary income, which is subject to a progressive tax rates that range from 19% to 47%. And inside the category of ordinary income, you have salary, rental income, and business earnings. Then you have a second category of income, which is investment income, that is taxed at lower rates, okay, where you can find dividends, interest, capital gains tax. The deadline to fill or to submit the income tax declaration is June 30th. This is following the first tax year. So, for example, if you were a tax resident in Spain in 2024, you have to file for that year on June 30th, 2025. And usually you start preparing this tax on April 1st. Now, US citizens, you must, of course, continue to file taxes in the US, or at least report your activity. And the way you do this is you request a US file extension in April. If you live abroad, you can do this filing extension, and you would submit the Spanish taxes in May or June, and then you would complete the US filing 1040, deducting taxes paid in Spain under the double taxation treaty between Spain and the US. So you credit all the taxes you pay in Spain towards your US filings, and normally you wouldn't have to pay anything in the US because you already have paid in Spain, and even more. Now, this slide is so that you understand how the progressive brackets work, okay? And these are, let's say, ballpark figures so that you understand, because there is a common misconception about how these brackets work. Some people say, like, if I make 100,000 euros per year, therefore 100,000 euros would fall into the fifth bracket. You can see there on the right, incomes between 60,000 and 300,000 have to pay 45%. The question that a lot of people ask, if I make 100K per year, my income, will I have to pay 45% tax? The answer is no, not at least not because of your of the progressive tax rate, because the way it works is that you pay, let's say, a median or an average. Yes, the way it works is that the first 12,450 euros that you make as an income pay 19%. Then the following 8,000 euros roughly that you make pay 24%, and so on and so on. Therefore, the effective tax rate for a 100K income, it's around 36%, not 45%. Okay, and there you have all the calculation. Now, to have an idea, I have made these calculations of the effective tax rate. This is for income tax without allowances or anything, just so that you understand, for illustration purposes only, the effective tax rate for the different income amounts. For example, if you make 30,000 euros, the effective tax rate would be around 24%. 40,000, 26, 29%, 30%, 32, 400K, 36%. Of course, there's a lot of variations, regional variations, allowances, and deductions. This is just so that you understand how the tax brackets work. Third tax obligation, wealth tax and solidarity taxes. So these are two taxes that are calculated on the net value of your assets. First, we're going to talk about is the wealth tax. So you need to calculate the net value of your assets at December 31st, okay? This is a regional tax. So depending on which region where you live, you would be, first of all, liable for it. And second of all, there is a threshold that varies in which it starts to kick in. And then over that tax, there is the national solidarity tax that kicks in case you haven't paid anything of wealth tax. As you can see there, regional thresholds vary. Some regions, for example, Catalonia, this tax kicks in at 500,000 euros. And for example, in other regions is 700,000 euros allowance. Okay, so if you have assets value lower than that, you are not you don't have to, you're not liable for this tax. Very important, some regions like Madrid and Andalusia, you will not pay this tax until 3 million euros. Let's say Madrid raised the threshold to 3 million euros for the wealth tax, and Andalusia has 100% rebate on this tax. Okay, there is also what it's called the 60% rule. This is especially for people who own a lot of assets value, but they have very little income, right? So there is a rule that limits the size or the amount of wealth tax depending on how much income you are making. Okay, this is called the 60% rule. And if you use this rule, you can reduce it up to 80%. Okay, it is a pretty complicated rule to explain. And so you have to, it would require a special 10 minutes explanation of how this works, but it's something that you have to have in mind when you talk to a tax advisor mentioning the 60% rule, so you understand if you can reduce your wealth tax. The deadline to file this tax is June 30th, and the preparation starts usually on April 1st. Then we have said that the solidarity tax is not a regional tax, it's a national tax. Basically, the central government was not happy with certain regions like Madrid and Andalusia not charging people about this tax, so they created the solidarity tax that kicks in at 3 million euros net value of assets, with also an allowance, okay, of 700,000 euros or exception, okay. And the deadline is 1 month after the wealth tax, okay. So if you have paid the wealth tax, you don't pay the solidarity tax. But if you haven't paid the wealth tax and you have assets over that value, you will have to pay wealth tax regardless of where you live in Spain. This is an example of how you calculate the wealth tax. This is for someone, for example, that lives in Catalonia. And there on the right side, you can see the different values of assets for 1 million, 1.5 million, 2 million, 2.5 millions. So you have, as we said, only 500,000 euros threshold in Catalonia, where this wealth tax starts to be liable. There's also an allowance if you own property in Spain of up to 300,000 euros. So in this example, I have included this allowance. So if you have 1 million euros net value of assets and you have a property of 300,000 euros, in Catalonia, you will start paying your wealth tax for 200,000 euros. Okay, there are progressive rates that the calculation work the same as explained before. So for that first case, you would pay less than 500 euros per year of wealth tax. As you can see, it increases the more net value assets that you have. And as I said before, for people who still are joining the webinar, you can ask your questions anytime. Make sure to include a question mark at the end of your question, and you can leave a review on Trustpilot if you're happy with the information I'm sharing today. Now, let's continue. Tax considerations for digital nomads, and I'm going to have, I think, 3 slides just about digital nomads. A lot of people joining this webinar are in this situation. And this first slide is only for employees, not for freelancers or self-employed. So for this case, employment relationships require an employer-employee contract. This is the W-2 equivalent in the US. And of course, someone has to pay the social security contributions in Spain or Seguridad Social. The payments are made in Spain unless the employer lacks a local presence, in which case the employer must register for Spanish social security. So the company has to register in Spain, or the individual employee who moves to Spain has to provide a certificate of coverage, also called A1. And at the moment, only the UK A1 is being accepted by the Spanish authorities and lasts, actually, I think it's 2 years without further renewals, okay? There's also some people from the US who have moved as employees lately, and they said that the certificate of coverage was accepted, but they seem to be very, very little exceptions, okay? Most of the people are unfortunately denied because this certificate of coverage is not accepted by Spanish authorities from US nationals under the W-2 situation. Beckham law benefits are available only to employees and not self-employed. Therefore, if you move to Spain as an employee, you know that you could potentially be eligible for the Beckham law or special tax regime with a flat rate of 24% for your income generated in Spain. The filing always June 30th for general tax regime, okay, Form 100, this is IRPF or income tax, and Beckham law is Form 151. As we said, the preparation starts on April 1st. Now, if you move to Spain as a digital nomad with this visa, as a contractor or self-employed or 1099, Digital nomads working under commercial agreements in Spain are considered self-employed. These are called autónomos in Spain and are required to contribute to Spain's social security system, which provides access to healthcare and pension benefits, okay? Public healthcare. So you don't have to get a private health insurance. You just have to promise that you will register to the social security, okay, once you are accepted of your visa, and then you will be covered from your healthcare requirements. Contractors are not considered employees, meaning that they're responsible for managing their own tax filings and social security payments. As we said, except very, very few exceptions, Beckham law does not apply to contractors. And the deadlines, this is also something that applies to many people who move in the second half of the year. They didn't spend 183 days in Spain. So the first year that you move to Spain, you will be considered non-residents. So you will have to pay quarterly payments, okay, for the taxes and social security as non-residents. And then after you become a tax resident in Spain, you will pay as residents. You will have different deadlines depending on how you're considered. And here's a specific case of someone who moved in September 2024 as digital, let's say, first as tourist, okay, arrived to Spain, apply for DNB 1 month after, approved for the digital nomad visa in November, and registered as autónomo in December. Okay, so in this case, this person that has worked as freelancer remotely for a non-Spanish company or several non-Spanish companies have to pay tax on that income as non-resident because this person is physically in Spain. Okay, and I quote here a lawyer who does a lot of these digital nomad visas applications. And this person says, for tax questions, if you ask 10 different people, you'll get 10 answers. This is particularly gray areas. You weren't resident until you got your TIE card or Tarjeta de Identidad Extranjero. Okay, this is the residency card with your photo. So you weren't even officially allowed to work, but you're supposed to pay tax in the country where you're physically working, which is maybe what you mean by address. So strictly speaking, any work performed since September, if you were in Spain working with your computer and invoicing, you have to pay tax as a non-resident. Now, let's talk about additional taxes in Spain. This is coming back to everyone. Different taxes that you have to have in mind. First, inheritance and gift tax, impuesto sobre sucesiones y donaciones. This is paid by the heir or recipient. And of course, you have a lot of different tax reductions and exemptions that vary by region, also by the level of connection that you have with the person that is giving you the inheritance or the gift. Then you have transfer tax. This is for real estate, impuesto sobre transmisiones patrimoniales, okay, real estate or other assets. This applies when you buy a property that is secondhand, that is not new built property, and it's a regional tax that ranges from 6% to up to actually 11%, depending on the region. Here in Andalusia is 7%, in Madrid is 6%. I think in Catalonia is 10%. I think in Valencia also there is a range close to 10 to 11%. And there I wrote 100% to non-residents. Well, I write that because, as you probably heard, Mr. Pedro Sánchez, Prime Minister of Spain, at a political meeting, he said that non-European Union non-residents who purchase property in Spain shall be taxed 100% of the property value as transfer tax. This is what he said, okay? We'll talk about that on the next slide. Property tax, impuesto sobre bienes inmuebles, or IBI. This is an annual tax based on the cadastral value of a property that tends to be considered extremely cheap, extremely affordable by Americans, especially because here, for example, for 100 square meter property, you would pay 300, 350 euros per year. And I hear that in the USA, for a single family home, you're over $1,000, I think, per month. I'm not 100% sure now, but yeah, the difference is huge compared to USA. Municipal capital gains tax, impuesto sobre el incremento de valor de los terrenos de naturaleza urbana, or plusvalía municipal. This is a tax on the increase of a property value upon sale. So when you sell a property, you will have to pay tax on the earning that you made, okay? The difference between the price you paid and the price that you're selling. Of course, if you're making an income on that, an earning on that. Calculation methods depend on the municipality because it depends on the cadastral value of the property as well. There are some calculations there. And something important coming back to the transfer tax when you purchase property here is that you have to pay this tax within 60 days of purchasing the property. So you have to budget accordingly. If you're going to buy a property here in Spain, roughly, you will have to pay 10, 12% tax when you buy the property, meaning 300,000 euros property, you will have to budget 30,000 euros of tax and expenses, notary. Maybe you buy through a realtor that you have to pay that commission too. So all that is paid at the beginning. I say this because in USA, normally it's transfer tax, as far as I understand, you pay when you sell. many years after you have received a lot of rental income potentially, or you have paid your mortgage, etc. This is something that you pay at the end, but in Spain you pay at the beginning. The government wants that money right at the beginning when you buy the property. Coming back to the announcement of Mr. Pedro Sánchez, Prime Minister of Spain, where he said that non-EU residents, non-EU passport holders, non-residents should pay 100% of the property value in tax. I have several videos there, not only myself, where I interview Ainhoa Manero of Stern Abogados, but also I have an interview also including Marcos Gonzalez, who is a tax specialist, tax lawyer that works with Ainhoa. And you can find the links on Spainguru's YouTube channel and on Stern Abogados' YouTube channel if you want to know more about this and about Beckham law for digital nomads, which can be very interesting. If you want the links, you can send me an email to hello@Spainguru.es, and I will be happy to share the links with you. And of course, those videos are 100% free to watch. But long story short, it is highly unlikely that some kind of law like that passes, because there are European regulations that would forbid something like that to happen. Okay. Now, going to capital gains tax. A lot of you may be thinking about selling your home and other assets before moving to Spain. But of course, capital gains tax in Spain tends to be higher than in your original country. So if you can avoid it, that would be a great decision, in my opinion. Okay, there are mitigation rules. For example, if you reinvest the money in a property in Spain, etc. If you're older than 65, there are allowances and mitigation rules. But the best is if you could just simply avoid paying the tax altogether. The best way to do this is considering a timing strategy when to move to Spain, when you become a tax resident in Spain, and when you sell your property. First case scenario is simple. You sell in tax year 1. For example, you sell your property in 2024 and you move to Spain in 2025. So different tax years. That tax event is not taxable for Spanish authorities. But if you consider moving during the same tax year, make sure that you don't become a tax resident in Spain during the same tax year in which you sell your property. For example, you sell in January, you get your visa in April, and then move to Spain after July 2nd, so that you spend less than 183 days physically in Spain. Always make sure you didn't spend any day before as tourist. A lot of people don't count those for tax residency, but they do count, so be careful with that. And these are the tax rates, the progressive tax rates for the capital gains tax, and some mitigation conditions. And also one frequently asked question: if you retire in Spain, is your pension taxable? Now, your pension will be taxable in Spain after you become a Spanish tax resident. As we said, after 183 days in Spain, physically present in Spain. And there's some thresholds for declaring the pensions. So if you have a single income source, it's 22,000 euros annual threshold. So if you make less than that, and if your sole income source, but something you have to have in mind, if you have multiple income sources, then the threshold goes down to 12,000 euros aggregate income and only 1,500 euros for a secondary source. Something important to have in mind: pensions from abroad appear as a second payer. So if they are greater than 1,500 euros per year, you will have to declare them anyways. So have that in mind. The progressive tax rates for pensions in Spain, the same is income, is ordinary income, range from 19% to 47%, progressive brackets. But there are specific rules for US and UK nationals because of the double taxation agreements that exist between the countries. Social Security and private pensions are taxable, but government pensions from the US or veterans pensions are exempt of paying taxes in Spain. Okay, and this is a little important thing that should be checked, unless you are a dual citizen. If you're a Spanish citizen, if you hold Spanish citizenship, some people say that then double taxation agreement wouldn't count because you're a Spanish citizen. So your government pension should be taxed in Spain. Although I couldn't confirm this 100%. But some people say, be careful if you are receiving a government pension or a pension that is not taxable in Spain because of a dual taxation agreement. If you choose to get your Spanish passport, be careful because you could lose those benefits, okay? Because, as you probably know, Spain tells you should renounce your US citizenship if you become Spanish. Therefore, you could not say, let's say, publicly that you hold both citizenships. Therefore, you cannot benefit from the double taxation agreement. But this is something to be confirmed by immigration lawyers and tax advisors, really. Now, in the UK, state and private pensions are taxable, but public sector pensions may be also exempt, same way as with the US. Allowances for pensioners for ages 65 to 74 years of age, 6,700 euros annual allowance. And if you're over 75, is 8,100 euros annual allowance that you don't pay taxes. You pay taxes over that amount. Now, taxation of American 401ks and Roth IRAs in Spain. 401ks taxation in Spain, the distributions are taxed as general income at progressive rates, again, up to 47%. It doesn't have to be that. From 19 to 47%, traditionally exempt from Modelo 720 reporting and wealth tax, but caution is advised due to evolving interpretations. I'm going to talk about that. Roth IRA taxation, investment gains taxed as income at progressive rates up to 26%, must be reported on Modelo 720 annually based on the account's surrender value as of December 31st, and is subject to wealth tax with rates varying by region, as we said. And key considerations, recent rulings, really they're not rulings, these are consultas vinculantes. It means that someone has asked the tax authorities, and the tax authorities' answers is of legal value. Okay, this is a consulta vinculante, and they said in this answer that IRAs and possibly 401ks require reporting in Form 720 as well. Okay, this is something to check with a tax advisor. Okay, with your tax advisor that understands how the 401ks and Roth IRAs or IRAs work. Okay, and how they are considered in Spain. And as I said, seek professional advice to ensure compliance about this. And you can find recommended advisor on Spainguru.es. I have a lot of content about this. There are some articles there and some videos. There you can scan the QR codes. As I said, this is absolutely free. If you're in this situation, try to read as much as possible so that when you sit down with your tax advisor, you are fully informed and you became a sophisticated person to talk with about your personal situation, and make sure to take the best decisions even before even considering moving to Spain. Make sure that you understand perfectly what your tax situation will be when you move to Spain. And this, I try to put everything together. It is a very noisy slide, I know, but I try to put everything that we said together in one single page. All the considerations, the obligations, the most important things to have in mind so you understand how generally taxes work. First, tax residency in Spain, more than 183 days physically in Spain from January 1st to December 31st. You will pay taxes on your income and potential net value of your assets once you become a tax resident in Spain. Two, your key tax obligations. The first one, Modelo 720 for overseas asset net value declaration, personal income tax on June 30th, wealth and solidarity taxes on June 30th and July 1st. July 31st. Then something to consider, special tax regime like Beckham law with flat rate of 24% for employees moving to Spain. 4, taxation of pensions with a focus on US and UK nationals. If you have government or public pensions, usually not, tax exempt in Spain, you will pay taxes in your origin countries. Otherwise, your normal average pensions pay taxes in Spain. 5, taxation of U.S. investment accounts, 401k, Roth IRAs. You potentially have to declare those in the Modelo 720 and pay taxes on the distributions. 6, taxes for digital nomads, depending on when you move in the year. You are non-resident first, but you have to pay taxes on the income generated from working from within Spanish territory. And then once you become resident, you start paying taxes as resident. Additional taxes, inheritance and gift tax, property tax, EV, capital gains tax, transfer tax if you purchase property in Spain. As I said, second-hand property. If you buy a new build property, you would pay a VAT rate of 10%, which is a national rate, VAT, which is reduced because the general VAT is 21% for most products, but for properties is 10%. Deadlines to remember, as we said, the 720 for overseas asset reporting is now, soon, March 31st. Personal income tax, June 30th. Wealth tax, the same, June 30th. And solidarity tax, July 31st. And if you're self-employed, you will have to pay quarterly payments, January, April, July, October, for income tax and VAT declarations. And remember how Spainguru can help. You can find professionals for your tax advisory or financial planning, but not only that, health insurance, sworn translators, apostle services, so many different things. Just go on Spainguru.es. I invite you to go and look around the menu because there's so many things that I have been adding all these years that I'm sure will help you, even if you are thinking about moving to Spain or you have already done it. I'm sure you will find interesting stuff on Spainguru.es. And this is the calendar. As we said, personal income tax June 30th, together with wealth tax, Form 720 March 31st, right in a few days. Solidarity tax July 31st. And depending if you are self-employed or not, if you're self-employed, you also have to do quarterly declarations. As I said, Spainguru.es is there to help you. And if there's something that I missed today, or you want to give me some feedback, or you have a specific question, as I said, I'm not a tax advisor. The content of this webinar is for information purposes only. This is not tax or legal advice, but I've been hearing so many questions from people like you that sometimes I know where to point you in the right direction most of the times, or at least tell you the different resources that are at hand that can help you out. Always send me an email to hello@Spainguru.es. If you haven't joined today, there's so many Facebook groups that you can join, YouTube channel, 1 video per day, many of them about taxes, and the newsletter. It is free to opt out anytime you want. You can just join it. It is free, where I talk about the most discussed issues of the previous week and most watched video. And now we enter the Q&A session. The Q&A session, I'm going to go through the different questions that we have. And if you haven't done it so far, if you can leave a review on Trustpilot, there on the top, there's a green bar with a red button where you can leave a Trustpilot review if you're happy with the content that I share today. And now let's go with the questions. David, thank you for joining today. Does a pension from an employer paid from an annuity count as ordinary income or investment income? That's very, very technical. I'm sorry, but I cannot answer you that exactly. And how the different types of income for this, really, like, you need to join maybe Facebook group and ask from people who have the same type of income that you have, and ask them directly like how they are declaring it, how it is considered for them, what is working for them. But of course, this is gonna be not professional advice, but at least you will know exactly what other people are doing. Could be wrong, could be right, but at least you have some feedback. But I highly recommend you ask a professional that checks exactly what type of income you have and how it would be considered by the Spanish tax authorities, even before moving to Spain, so you understand how much tax you will be paying. Stuart, will I be liable for CGT in Spain having sold my property in the UK? I will not apply for NLV until after the sale. As I said, if you are not a Spanish tax resident during the same tax year, then your sale of your UK property will not be taxable by Spanish tax authorities. Okay, so make sure that you check the timing on when you do it. Spend less than 183 days in Spain, the same year in which you sold the property, and you will be avoiding Spanish CGT. Stuart, will I be liable for inheritance tax having sold my property in the UK? I will not apply for the NLV until after the sale. I'm not liable for any inheritance of CGT in the UK. As I said, if you're not Spanish tax resident, then you don't pay taxes in Spain if you're not Spanish tax resident. And if you're a non-resident in Spain, you only pay taxes for income or taxable events from assets or income sourced in Spain or present in Spain. Display, store, inheritance tax. I think this is the same question, repeated. Chris, my government teacher pension is taxed at source in Canada before I receive my monthly pension payment. Will that tax be paid instead in Spain or once I claim residency in Spain? So I don't know the exact paragraph in the double taxation agreement between Canada and Spain, but usually government public pensions are exempt to pay tax in Spain. You will pay taxes in your origin country. But I don't know about the double taxation agreement. Maybe you have to search. They're not very, very long. Okay. For example, the US taxation agreement, I think it's Article 15 or 16, and you could read that there is some sort of exemption for public or government pensions. Okay, this is the US one, but they tend to be very, very similar, those agreements. So please check it out, and of course, always consider joining a community or other Canadians that are in your situation, and or checking with a tax advisor that understands how that type of pension is considered in under the eyes of Spanish tax authorities. Nadine, if I receive a UK veteran pension of around 12,000 euros or pounds, although I understand this is not taxable in Spain, again, veteran, public, government, usually exempt because of the double taxation agreement. That's it. Use up all the free allowance I have. Therefore, a second pension falls straight into tax. This is a great question. This is very technical, unfortunately for me. As I said, join the groups, ask the community, and tax advisor. David Saavedra, can you go over the pension social security allowances? I did mention some allowances. Yes, I think it's around 6,700 and 8,100 depending on your age, after 75 years of age. How much per person are you allowed in Social Security income before Spanish tax? So I mentioned that. Kim, I moved to Spain at the end of last year, so this year will be my first full year as resident. Do I need to declare my worldwide income in March this year? Or next year when I have completed more than 183 days? I think there's a mixed question here. When you say March, I guess you are referring to the informative 720 form. This is the net value of your assets declaration of overseas assets for all the different categories that are together over 50,000 euros. So at the end of, if you move at the end of the last year, I understand that you should not declare your 720. You will have to declare your 720 for year 2025 before March 31st of 2026. That's my opinion. Now, for your income, again, last year you were not resident in Spain unless you have income source in Spain or, yes, income source in Spain. Then in the case, you will pay tax as a non-resident for 2024. But 2025, you will become tax resident in Spain. If you spend more than 183 days here in this calendar year, you will pay your income tax before June 30th, 2026, your 2025 income tax. Okay, I think we went through all the different questions. And yes, thank you so much for joining today. I hope that you found this webinar useful. If you think this can help you or others, the only thing I ask in exchange, if you leave a Trustpilot review, that would be extremely, extremely helpful for me. That would be it. Thank you so much for joining today. You will receive a recording of this webinar in your emails in the following hours. And I think everything has been said. Join the YouTube channel, join the groups, join the community, send me an email for anything you need, and let's stay in touch. Thank you so much for joining today. Thank you, David. Thank you, Stuart, and everyone else. Have a great week, and see you soon. Bye-bye.